Hey, what's going on, everybody? Welcome back to the Land Development Podcast. I'm your host, Ryan Glick. If this is your first time joining us, each week when you tune in, you will hear one of two different types of shows. Sometimes when you tune in, we have an interview-style show where we have on someone associated with the land development industry. We talk about their origin story, and then we discuss some of the projects that they've been working on over the years. Other times when you tune in, we have industry news, and that's where we pull up a few different headlines and we talk about what it means for the industry. And today we have an industry news episode, as you probably know by seeing the title of this particular episode. But joining me, as always, on these industry news episodes is Charles Covey. Charles, how's it going?
Going good. How are you?
Doing good. So we had to push back our recording slightly because I had to go coach a couple basketball games this morning, and also just some of the things that happens when you get old with had some neck issues earlier in the week and things like that, where you just look in the mirror, you're like, come on, man, you can't be out of commission because, you're lifting weights and now your neck won't turn one direction and all this stuff. But
yeah, that's wild. Getting old is quite the time.
Yeah. But here we are, we're recording, and we've got three good articles here that we're going to be digging into related to land development. We've got some commercial real estate stuff. We've got some a topic related to Trump getting into office, and also one related to some data centers. So we will go ahead and get into our first headline, which comes to us from Globe Street. The headline reads, CRE optimism abounds from 2025, but distress challenge remains. Reading from the article, as 2024 comes to a close, the mood within the CRE market has shifted toward bullishness, boosted by positive macroeconomic developments, accommodating financial policy changes and indications that a new growth cycle is beginning, according to CRE's Q3 National Commercial Real Estate Report. Quote, our industry is amazingly resilient and sentiment has increased in the last quarter despite some lingering headwinds, said CRE Chief Operating Officer Eli Randall. Sentiment keeps this market active as much as the crunch numbers, and we're looking forward to an even more robust 2025. During the quarter, overall buy actions increased across all asset types, with industrial up 5.5%, office up 5.93%, retail up 4.87%, and multifamily up 4.97% quarterly. Offers for properties also increased, indicating serious buyers are acting decisively. On the leasing side, total tenant activity was down marginally across most sectors, with industrial tenant activity down the most. Continuing on the article here, quote, overall fundamentals remain relatively solid with supply for most product types held mostly in check, said Randall. However, many markets and product types might be slow to recover, if they recover at all. A wave of distressed transactions could show up early in the cycle as more favorable pricing presents an opportunity to cleanse balance sheets and dispose of more challenged assets. Approximately $2 trillion in CRE loans are set to mature over the next 2 years. Office properties represent nearly 1/3 of maturing debt, followed by multifamily, retail, and industrial, Crexy said. So this one here, this is a topic that we've been talking about quite a bit, especially here at the end with these CRE loans. But I'm interested, as we're looking ahead to 2025, Charles, I don't know, what you've been seeing or what your thoughts are as we go into the new year. It's talking about a good sign from the last quarter and a few of these different asset classes. And if you think that's something we're going to continue to see.
Well, there were articles last year that really brought up some concern, right? There were some banks that had some pretty significant real estate assets that were challenged, one in Houston and some other ones that were notable. And it's like, okay, are they going to be able to pull this off, or is this going to be like a major bank crash? And it looks like, at least from what I can see, the fear of banks going under seems to have subsided. I don't think we're in that position anymore. There are going to be some assets that go back to lenders. I don't think there's any question there, but I think there's a lot of assets that deals are going to be worked out on. There's some office stuff that's in pretty bad shape, so some of those won't work. And another thing you and I had talked about, if you think about the really nasty ones, right, where somebody goes into a project and they've got more debt than what the project is technically worth now, based on they underwrote it wrong, or the rents are no longer what they underwrote. and the interest rate is not what they underwrote, and like all these things, the exit cap is not what they underwrote. All of these things combine to create a project that isn't worth what's in the project now. That's a problem if you can't go raise the equity to make that exit, and it just creates a nasty situation. The bank gets it back, then the bank writes down the loss, whatever they somebody else comes in and takes it for the more appropriate value that's closer to market. The developer loses money. It's a bad situation. There will be those for sure. We know of quite a few of them that it's going to happen. But I think there's also a lot that are not quite that nasty, that are kind of like, yeah, this is not a great deal. Maybe our debt service coverage ratio doesn't quite meet. Let's say the lender wants 1.25 DSCR and the project's at a 1 or a 1.0 something. Lender's probably going to let this one get worked out, right? They don't want these back. They really don't, and they don't want to write down losses. So I think a bunch of this stuff is going to get worked out, and it doesn't look like we're in a major financial crash scenario like some were predicting, a year ago.
Yeah. Do you think, I was thinking about this as well. When you look back, I know this isn't the same thing as 2008, but do you think cash holders right now are going to have some big opportunities in 2025 for some different properties? Or do you think most of the situations where these properties are going to end up being owned by the bank are going to be properties people don't even want to begin with? So even if you're holding cash, you're not going to want to get in on those deals anyway.
Right. Well, there's going to be the haves and have-nots here. So if you're an investor that's sitting on 100,000 to $1 million, you're not going to get the call. They're not going to call you and say, "Hey, we've got a deal for you." This is all going to go to institutional dollars of hundreds of millions or tens of billions that have pooled in opportunistic funds. So everybody's been building up these war chests for opportunistic deals over the last 24 months, and there is an absolute ton of money sitting waiting on these. Now, what's interesting about it is that there's more institutional opportunistic money than opportunistic deals, in my opinion. I think maybe significantly more. So those deals, those opportunistic deals, they're going to get scooped up pretty quickly. Those are not going to consume all the funds that are sitting, and then the rest of those funds are going to have to get deployed. So even a small family office is probably outside looking in on a lot of those scenarios, because there's so much big money that's going to have access to these deals, and in a portfolio fashion. Like if a bank has a bunch of bad deals, why would they one off these when they can go to a Blackstone or somebody else and say, "Hey, here's 500 million worth of deals if you guys want to come in and take these from us." And it's going to be more that kind of deal making, I think, at a giant level, as opposed to one-offs by small and medium investors.
Yeah, I wonder, talking about the institutional money, I know that's been a big talking point, I feel like, for politicians, and I think people in general, is just understanding what's the right makeup of institutionally owned real estate assets versus, smaller, family offices or smaller shops that are people that own these various assets and stuff. And I just wonder if this is going to be another opportunity, I guess, for those institutions to essentially have more transfer, quote unquote, transfer of wealth to some of the bigger, these bigger funds and everything that are just buying up so much real estate. And, what does that continue to do to our economy and really just the ownership in general? You think about the American dream, and I know the American dream is more so residential, real estate, and we're talking commercial real estate here, but still, when you think about a lot of the institutions buying up these different assets, and they're probably not going to necessarily release them anytime soon. Anyway, that's just something that comes to my mind when I think about these types of situations and how it's just probably going to shift more of those assets over to these institutions, like you just said.
Yeah, I think unfortunately that seems inevitable in this kind of scenario.
Yeah, exactly. Well, cool.
I don't love it, but it is what it is.
Yeah, exactly. Well, this is something we'll obviously continue to talk about in the coming weeks and months as we go into 2025. We're just a couple weeks away, so we'll be there soon, and we'll start to see kind of how things are shaping up in the new year. And obviously, this CRE loan situation is something that's happening over the next couple of years, so we're not going to know what that's going to look like too soon, but we'll see over time kind of how that plays out and everything. Let's go ahead and move on to the second article. The headline for this one comes to us from BizNow, and the headline reads, "Head of Congressional AI Task Force urges regulators to allow data centers at nuclear power plants." So reading from this article, Rep. Jay Obernolte, not sure if I'm saying his name right, but Obernolte, a Republican from California, urged FERC commissioners in a December 5 letter to move quickly to remove regulatory barriers preventing nuclear power plants from selling electricity directly to the data centers that developers are increasingly seeking to build alongside them. Obernotti's letter, first reported by Reuters, frames the issue as a matter of national security and critical to maintaining the country's leading position in the global AI arms race. The letter follows an early November FERC ruling that blocked a power agreement underpinning Amazon Web Services' planned data center campus at Talon Energy's
Susquehanna. That's a good one.
Susquehanna. There we go. Steam electric station in Luzerne County, Pennsylvania, one of the largest nuclear power plants in the country. AWS and Talon had agreed to a $650 million deal in March, under which the cloud computing behemoth acquired 1,200 acres adjacent to the 2.5 gigawatt power station. AWS planned to build as many as 15 data centers on the site, largely for artificial intelligence, which would be powered by nearly a gigawatt of electricity purchased directly from the nuclear plant next door.
Mm-hmm.
And the last one here, the company's deal with Talon was the first of its kind between a nuclear operator and a data center firm, and it provided a model that other utilities and data center firms had quickly sought to replicate in markets across the U.S. as a key tool in addressing power shortages, slowing the build-out of data centers to support AI. FERC commissioners said their decision to block Talon's agreement with AWS was intended to avoid setting a precedent that would trigger a wave of similar projects before the consequences were fully understood. So this one is not, we haven't really talked about data center, or we haven't talked a lot about data centers, but I don't feel like we've ever really talked about power plants and the power needed for some of these data center projects and everything. And I'm not sure what you think, when they're saying that they want to be careful about what precedent they're setting, I also wonder what it means by delaying too. Like, not kind of moving forward with one of them. Does it really set a precedent? If you move forward with one project and essentially say, hey, we're going to do this project and see what it means so that it can get moving while they figure things out, versus everybody stop while we go. And we know government's slow with most things. And so who knows how long it's going to take for them to come to some sort of a conclusion. What are your thoughts when you see something like this?
Well, this is government interference at its finest. So to your point, yes, pick a good one as a test case. This seems to be the front runner for that. Let them work it out and let's see what happens. Let's see what problems come up, and then we'll sort those out for the next ones. And that's how things move forward, right? That's the entrepreneurial way. That's how America was built, by trying some stuff and seeing what works and seeing what doesn't work. And obviously we're not trying to go crazy and do dumb stuff and create problems, but I don't think this is that case. So you've got to get things moving. Momentum creates momentum. And so if you've got a project that's ready to happen, don't shut it down with regulation. Let it go. Let builders and developers do what they do and create value. And then you can adjust if you need to. So I'm with you. I think that this project needs to move forward, use it as the test case, and then we can adjust on the next one.
Yeah, what's interesting about AI too, and we talked about this a little bit before we started recording, is that it does demand a lot of computational power. And so there's a lot of energy that's needed in order for these AI data centers to run. And when they build one, they may build one on the East Coast or a cluster of data centers on the East Coast, and they're likely going to do the same thing on the West Coast and probably around the world eventually. But what it's going to do is it's going to force the hand of a lot of people who, we have this whole concept in this country and kind of the buzzword of clean energy. And what this is going to do is it's going to, I think, shed light on the fact that some of these different energy sources aren't going to be able to keep up with AI. And so what is that going to end up doing for our various energy policy? I know some states have certain things that they're doing to try to, get rid of certain types of energy in favor of whether it's wind or solar or whatever. But if we want these technologies and we want to continue to advance as a society, we're going to have to find realistic solutions to some of that. And so when I see things like this, that also comes to my mind. I'm like, geez, how is this going to play out? And I know we have an administration now coming into office that sees things differently than the prior administration, but that's kind of what we get in this country. We just hop back and forth between completely different ideologies and viewpoints. And yeah, it's going to be interesting to see how this continues to move forward, and especially as technology continues to move forward, because data centers are popping up everywhere, and this energy need is just going to continue to become more and more and more of a need. So anyway, I don't know how that's going to play out, but it's just something that stuck out to me.
Yeah, a couple thoughts on that. We haven't had as a nation, we haven't had our power grid really be a major talking point in a while, right? Because we've been actually chasing power usage down in a lot of ways. We use a lot of, we use more solar, we use more LED lights, we do all these things now that are more efficient, and so our power situation hasn't been like a top 2 or 3 talking point in a while for government, and we're seeing that change. So the data center usage is a significant element. In fact, I just saw an article last week from the Texas governor, and of his top 2 priorities for this next year during our legislative session, nuclear power is one of those. And that's pretty important. And in the state as large as Texas, I think it's going to set a pretty important precedent for that to be a big deal. Now, Texas has got some challenges with their power grid. ERCOT, which is the organization that manages Texas Power, they're just kind of bumping up against capacity all the time. So they've got to find ways to develop nuclear faster. I think that's going to be the future. There's a lot of stuff with nuclear that, there have been problems, right? There have been nuclear plants blow up. It's a bad thing. But the new generation of nuclear is so much safer and so much different in almost every way that we just really don't have those same concerns. And so getting past that kind of public opinion element is a challenge. But once we get past that, I think that is the future of our power grid. So it's going to be a talking point that we probably should cover a little bit more often, because it is elevating itself onto some priorities for several states, and probably on a national level too. So very interesting to watch this play out. I wasn't really involved in data centers that much until recently, and we're working on a data center site and doing some entitlements and kind of going through that process. And the power is such a massive component there, and just kind of understanding how much power they use. It's crazy.
Yeah, I also wonder too in Texas. I mean, you talk about the power, and you also think about the water, and you think about all the people moving into Texas and coming in. Yeah, it makes sense that there's even more of a demand for. I mean, outside of just the technology side of things, just people in general coming into the state is creating more of a demand for more power. And then obviously we've talked in the past about water, and the higher need in water from all the people that are coming into that area and stuff. So yeah, there's gonna be some things in Texas that I'm gonna have to figure out as far as how some of these things are gonna play out to keep things moving in a positive direction and everything there.
Yeah, it's going to take some regulatory adjustment to make these happen quickly, because you just think about the components. The power plant is one thing, but they all require a large lake for cooling. Well, hell, it takes almost 20 years of process to build a significant lake in Texas. And that's why they haven't built very many in the past, and they're building some now. So that's a problem. They're going to have to abbreviate the process in order to allow these things to happen. So hopefully being a priority in Texas, I think it's going to be really interesting to see that play out in this next year.
Yep. All right. Well, let's move on to the third and final headline here. This one comes to us from Newsweek. The headline reads, Could the U.S. housing market see a Trump bump in 2025? Quite the headline there. All right.
Yeah. Are we going to start saying Trump bump on the regular? I don't know. I don't know if that's going to stick.
Yeah,
I hope
don't know
not.
about that. I hope not too. All right. So reading from the article here, the housing market could see a Trump bump next year if the president-elect goes ahead with some of his proposed policies, according to a new forecast for 2025 by Realtor.com. The analysis predicted that next year's housing market could experience a boost for the better if Donald Trump brings in his proposals to make more federal land available for home building and addressing regulation. Regulation typically makes up almost 24% of a house's cost, according to a study by the National Association of House Builders. I think that's supposed to be home builders. I think they got a typo there, which comes to around $90,000 for the average home in America. If Trump implemented his proposals on home building and regulation, the Realtors.com forecast predicted that it would help to increase the supply of houses. Danielle Hale, a chief economist at Realtor.com, commented on the forecast, quote, the size of the size and direction of a Trump bump will depend on what campaign proposals ultimately become policy and when. For now, we expect a gradual improvement in housing market dynamics powered by broader economic factors. The new administration's policies have the potential to enhance or hamper the housing recovery, and the details will matter, she added. The Economist also said that while Trump can work quickly with his administration to implement some regulatory changes, other policies that will affect housing, such as tax changes and broad deregulation, require the cooperation of other branches and levels of government. Outside of politics, Realtor.com also predicted that next year will bring the most balanced housing market in 9 years. The outlet thought that house prices would grow by 3.7%, continuing growth trends since 2012, while rents would remain about the same, with a slight drop by 0.1%. It was also believed by the outlet that mortgage rates would be 6.3% and edge down throughout the course of 2025 to hit 0.1% less by the end of the year. Existing home inventory would also continue to increase, following a trend from 2024, and single-family new home starts would grow by almost 14%, reaching 1.1 million homes, according to the forecast. So I don't think there was a ton of information in this, but I do think it was important. One of the things I wanted to point out was their mention of there's going to be some things that Trump will be able to do through executive order, but there's a lot of things that he can't do through executive order, and those are going to take time. So we may see some things happen, starting out day one. But again, a lot of the regulation that we're talking about here, again, it's going to have to happen at the state and local levels, not necessarily through the federal. And that's something that you and I have talked about before. You've brought up before. We talked about that even before we started recording here today. So otherwise, a lot of this article was a little bit kind of back and forth. It could be really good, but it could also be really bad. We don't really know. It just depends. And but I think we're going to see a net positive over time. I just think the big question mark right now is whether the timing of everything. And, if the tariffs get into place through, executive order, and then the taxes don't reduce for who knows how long. And so there's an offset, there's a time period where they don't necessarily overlap, and maybe it is a little harder for a period of time, or things are a little more expensive briefly. But I do think it's going to be a net positive. I think most people seem bullish in the industry. Most people that I've talked to have been very confident. I mean, it feels like a lot of the people, especially, I talked to a lot of people down in Texas, and it's felt like a lot of the people in the industry they're excited. I mean, they're excited for what's coming. And I think that's a good sign. Now it's just a matter of what's going to actually happen in January when there's a change of administration, basically.
Yeah, I think we'll definitely see a Trump bump, if you will, due to just the general feeling in the marketplace. The sentiment overall is good, and now I think 9 out of the last 11 elections, housing prices have gone up in the year following the election. So I think it probably is just a foregone conclusion that we're going to see a bump there. But to your point, the real change, the stuff that's meaningful, that lasts over time, is going to have to come at the state level for the most part. I'm still a big proponent of a housing czar, which would be a federal position that would help states, encourage states, and encourage processes to happen faster, and just really from a government level push that from a federal level. I don't know if that position is going to happen, but I think that would be something even in addition to what the HUD position is. So anyway, we'll see if they ever come up with something like that. But I think a lot of the states are prioritizing this, so we are going to see things happen. But again, it takes time. So I think the mandate that they talk about with a very significant red wave, the mandate of how things are now supposed to go, the American people have said, hey, this is what we want. I think that's going to give a license to a lot of state legislatures to go and do the things that they need to do that they might not have done in their last session because of some concerns. So I think that will help encourage some of the legislation that needs to happen.
Yeah, that's what I want to see. I want to see more states and local, municipalities take some action and look at what can actually be done instead of relying so much on the federal government. I think it's easy to forget that when the person you want to be in power is in power, and you want them to do all these things, and then you got to realize that if they can do all these things and you want to give that person more and more power, well, when they're not in power and somebody that you don't agree with is in there, they can do the same type of stuff, just with actions that you're not going to agree with. So I think it's important to, respect the balance of power and make sure that things that make sense to be done through an executive order can be done through an executive order, but also realize that the minute somebody different gets into office, they can just do another executive order to undo everything that was done there. So as much
Right.
stuff that can be done through the legislative process and through Congress and everything and the Senate, those are going to be the things that are going to be harder to overturn. And so, yeah, hopefully, I mean, it's just going to take time for some of that stuff, like you said, the things that will actually stick. It's going to take time for that stuff to get done. It's not going to be rapid. So we'll see how this plays out. But yeah, I think you're right. I hope that those local and state level legislators will actually, take some action or take a closer look at some things that can be done at that state and local level.
Mm-hmm.
All right. Well, that is the third and final article for this one. I think this episode is going to be coming out. We won't have our next industry news episode until after Christmas. So that'll be releasing, I feel like the day before maybe New Year's Eve is when our next industry news episode will come out. So just want to say for all of you, I hope you have a Merry Christmas, Happy Holidays, and enjoy the time together with family and everything. And we'll have another one come out next week. That'll be an interview episode on Christmas Eve, but our next industry news will come after Christmas. So with that said, thanks as always for joining us and continuing to support the show and everything. It does mean a lot to us, and we will talk to you next week.